Hello everyone, so let's get down to business. For the top-down analysis, the first thing you want to do is you come to the monthly. That is this monthly. I'm using XPS. Remember, why I'm always using XPS is just kind of because of the broad market, right? So when the broad market is going down, most times most of the stocks go down, and when it's going up, most times the individual stocks will also go up. And I will also show you what I look out for. So before we continue, if you had watched my previous videos, I told you that we have actually moved up 1, 2, 3, 4, almost 7 or 6 in a row, that we should be expecting a pullback, which is happening here now, right? That is, if you have been following me, you should know that I have been talking about a pullback is due, that we are due for a pullback. That in the previous moves, that this is almost one of the longest. We have, first of all, when you come to the monthly, you want to determine that we are on uptrend. So how do we determine that we're in the uptrend? If you had also watched my previous my previous videos, I said when we break this orange line, which is the 10 MA, sometimes I use the 7. I normally interswitch 7 and 10, but this one is the 10 MA. So when you break it on a strong volume and then you close above it, you are already on uptrend on the monthly chart. So you go down. So this is just for monthly chart. We just come here to know whether we are in the uptrend. So now we have confirmed that we are in the uptrend. So we go down to the weekly chart. On the weekly chart, we want to know the level where we are. I have also talked about the market cycle. In that, I talked about how to identify the level where you are in the market, which is the first thing you want to know. Where am I in the market? So you can see that we are in level 1 on the weekly chart, and we are expecting this to come down to this 50 RSI. That means we still need to come down to this 20 MA, this purple MA, that is the 20 MA. So we're expecting that we'll come down there, might even dip a little bit and then consolidate and come up, and then we'll start our level 2 of the weekly chart. So on the weekly, we want to determine where are we, which you see we are on level 1 on this weekly chart. And then on this one, you can see we are coming down to this place. So we now go down to the daily. So first of all, remember, on our weekly, we want to know which level are we, and now we have determined that we are on level 1, and that level 1 has actually gone up 1. Let me use this. We have actually gone up 1, 2, even rested a little bit here, and then 3. You see, so we have gone 1, the first level, second level, third level. But this one, this level where we can see it clearly, is on the daily, because we are still on the level 1. The level 1 of the weekly is when we have not yet touched our MA20. We haven't touched our MA20. Starting from the first move, we haven't come down to this MA20, so we are still on the level 1. So we now go down to our daily. So on our daily, you can see this whole week, this thing that happened on the week here. Let me draw it out. Everything that you see that happened here on the weekly is what you will now see on the daily from this point. So we now go down to daily chart to see everything. So this is just the daily. So the daily, and the daily have also gone level 1. You see, in every level we go, we come down to this area of average, which is our 50 RSI, or touching to this 20 MA, which is the purple line on the daily. Now we have gone the first one, then we consolidate. Second one, we consolidate. Third one, we consolidate, and then about to go for the fourth, which I said mostly we go the first, second, and the third. On the fourth, you start to get cautious that the market is overly extended and we should be expecting a pullback, and that will result to a pullback into the 50 RSI of the weekly chart, and that will also be our 20 MA of the weekly chart. And that will happen when you see this moving average has been, this RSI has been respecting on this 50 RSI, but when coming for the weekly, because we have to have what they call weekly retracement, we need to break it, come down here maybe towards this 30, then bounce back to this 50 again. We might actually drop a little bit and then break it up. So we have to consolidate below here and then break it up to continue our level 2 on the weekly chart. So now we have identified that, okay, on the daily we have actually had our level 1, level 2, level 3, which have like the safer levels. Getting into level 4 is like overly extended level, so you don't want to just open up yourself in level 4. You want to start taking your profit earlier, and once you're already done with your level 3, you should be taking out like 70% of your profit and then leaving 30% in the market if you want. That's how I do actually. Also, when you look at the volume, you can actually, okay, that will come later. Let's get down to the hourly chart now. If I want to buy, what do I look out for? Because whenever I want to buy towards this 50 RSI. For example, we make a move, okay, I want it to return to this 50 RSI, which is towards this 20 MA. This is the area of my value. This is where I want to buy to write the second move. Do you understand what I mean? After the first move, I want to buy on the pullback that brings it into this particular 20 MA. This area. This is where I want to buy on these areas. When we come to these areas, this is where I want to buy. So how do I really buy on this area? When the market have moved up to this point, you can see it have come to oversold on this RSI and then pulling back. How do I now want to buy? What do I look out for to buy, to enter the market? That is on my hourly chart. So I now go down to my hourly chart. Remember that on the daily we marked out those points, right? So let's go down to the hourly chart to see what we are looking for. I will advise that you activate gaps on your own chart, because gap is very, very important. So the first thing is when we are coming down, so the market comes, this hourly chart, the market comes down, okay, that is the retrace from this. On this, if you go to the daily, the market has been coming down, for example. So you come to your hourly, when it comes down, you want to see that buyers are interested. So you want to see, when the market is coming down, you want to see accumulation, and you will see it from the volume. Can you see this volume here? It will spike. So when the volume spike, it will always hold the market in that area. Let's assume that when the market now come to this 10 MA and start dropping and break below here, that means it has invalidated these buyers. But it has already told you that buyers have found this area as an average price that is good for buying. So when we now break down, like when we now come down towards this, like pulling down or pulling back, so we first of all want to identify the interest of the buyers. When they enter the market, the way you want to know that the buyers are now stronger than the sellers is, the first thing is the buyers enter. The second thing is you want to see the sellers try their last power or their last lock, which is here. And then the next thing is you want the buyers to come and cause what they call gap. That means the money that came into the market is actually huge, that there is imbalance that resulted to gapping. By the time the market gapped, this area, if you are into trading, will be your stop loss at this area. Let me draw it. I don't know whether you actually understanding me because of my English or the way I talk, but feel free to ask me questions. I will be able to explain better. So this should be a stop loss area. Okay, so let me delete it. Because we have seen a gap now, first of all, remember the market dropped down towards our 50-day RSI, which is coinciding with our 20 MA on the daily chart. But we are now on the hourly chart, so that is why you are seeing it below here. That is in the oversold region, this area of the RSI on the hourly. That is where you want to see the buyers stepping in with a huge volume, which you can see here. You can see this volume, you can see my arrow, you can see this volume. So this volume have confirmed that buyers have stepped in. You want to see whether these buyers can hold the market. This moving average that you see, if the okay, let me tell you something. You can see here on this area, you can see that when the market break from here, it came down, it come towards here, it becomes a resistance. It becomes a resistance until you see huge money that can be able to break above this 20 MA. You see this 20 MA have turned to resistance. You want it to be broken. Once you have money that caused a gap, imbalance that resulted to a gap that break above this purple line, this resistance that have formed after the market have pulled back, you want to break that resistance, and you want to break it with a gap. Remember, you want to break your resistance with a gap. So let me delete it. So now that we are broken with a gap, this whole area has become our buy point. From this whole area to this, from where this market started that caused this gap, has become our buy point. So what we are looking for is a pullback into it, and when we pull back into it, we want to see engulfing candle or a strong candle. So when we are coming into it, you can see we started to like come into it. Here we have volume that entered here, but it didn't hold. Personally, once I see this, I already know that buyers are also showing interest, but I'm trying to see a bigger candle. So you can see it came into that gap to acquire more liquidity. It came into that gap to acquire more liquidity that will help to keep pushing the market up. And when it tapped into it, liquidity flooded, and then the market started to go up. This is on this particular one. So let's go to the next one. On the next box, you can still see the same thing that you are looking out for. The first thing you want to see is a pullback, because on the daily you are on the oversold and you are pulling back into the 50 RSI, which is coinciding with the 20 MA on your daily. Okay, so on the hourly you will see it coming virtually to the oversold region. So you pull down. So the first thing is the pullback, so the sell-off, okay, which is you have seen here. Then you want to see the buyers to step in. You can see the buyers stepping here. You want to see the buyers step in, and you want them to hold their ground. So when the buyers step in, this one stepped in with a gap, but we will not consider this as our buy zone yet, because it stepped in with a gap. But you can see that this gap that brought this did not really go above our purple line, and even our 50 moving average is still above. We want to see these lines to be broken, that is breaking our resistance. So but we are also hoping that this place will hold. By the time we now found this gap, but it didn't break here, we are accounting this place as the first step in by the buyers, but it has shown us that the buyers really step in huge with good money that caused imbalance. Then we want to see the sellers trying their last or doing their last fight let the sellers do their last fight. So we can see if their last fight will result to a drop that will come to break here or it will not. So we are trying to see their last fight. Now the sellers stepped in. Remember, after a drop, the buyers step in. The sellers will try their last fight, and then the buyers also started to step in again. The next thing you want to look out for is now the break that will cause a gap. The break that will cause a gap. Remember, this first gap is just a step in of the buyers before you now see the sellers trying their last power, which they also tried alongside here. This one didn't cause a gap, so you are still expecting some fight from the sellers. Then the sellers also tried here, and then this is where we have our eligible gap. You can see with the volume, you can see the volume entered here, and here we now gapped up. This area becomes our buy point. This whole area becomes our buy point. Now, can you see that the market didn't actually pull down into it to tap? But what happened when it came down to this 20 moving average? The money now flooded in. So this becomes our engulfing candle. So we buy. We go to the next one again. The first thing you want to look out for is the pullback, because we're in the uptrend. Okay, you pull back because we are waiting for the market to pull into your 20 MA on the daily, which will coincide with your 50 RSI on the daily. But on the hourly, you will see it coming to the oversold region. And when this sell-off enters, what you want to see first is the buyers stepping in with what? Money. With that money that will cause, you will see the volume will spike above the average. Average is this yellow line, and the volume stepped in. Okay, then the next thing you want to see is the sellers trying their last fight, which might result to break off here of these buyers. If it results to a break of these buyers, that means the sellers have won. You have to stay out. You don't need to do anything. So the sellers stepped in. Sorry, but they didn't do any. They didn't break anything. Then the next thing you want to see is the buyers to come back again. That will cause a gap. Now you can see the gap here. So the buyer stepped back again. That caused a gap. This whole area becomes our buy point. This whole area from the bottom of here or here become our buy point. So now what are we looking for? We are waiting for this to pull into our 20 MA and have engulfing candle. Let's say when we got in here, let me take out this. Let's say when we got in here, we now have an engulfing candle here, for example here. That means we'll buy here. But when we got in here, the liquidity wasn't enough to push the market, so it didn't actually react, but it came to tap into, you see, into this gap. You see this gap here, right? Let me take away this one so you can see it clearly. So it come to tap into this gap because this is where there is imbalance, to accumulate more liquidity. So now you are waiting for something that will tell you that now the market have gotten liquidity, and you are waiting for something like engulfing candle or just a huge candle. So by the time we get in here, this area have said to show us a reversal pattern. Then we buy. When you buy, you can decide to put your stop loss just below here. Then you can now ride the trend. Now let's come to see what happened on this area when the market pulled back on this area. If you see on the daily, we have gone like level 1, level 2, level 3, level 4, like even the level 4 couldn't even go that strong. So when the market started to pull back here, would you have bought? Let's go down to our hourly. Remember, we are talking about this area now. When the market pulled down into this 20, let's see why we shouldn't have bought. You go down to your hourly. You can see that the market actually pulled down here, right, into this area. It broke this 20, pulled down to this 50. Okay, fine, no problem. Let's see whether the buyers stepped in. Can you see the volume? This is a very small volume. The buyers didn't step in. What you see is just the sellers. Here also the sellers. Here also the sellers, and the buyers stepped in here. So this is where the buyers stepped in, the first buyers. So when the buyers stepped in, we want to see the last trial of the sellers, which the sellers tried to pull down here. You see? And the buyers held their ground. Okay, when the buyers held their ground, what are we now anticipating? We want to see buyers stepping in strongly that will cause a gap up, Remember, this one is a gap down. This one that you see here, this gap you are seeing here is a gap down. It's not a gap up. This one is a gap down. So we want a strong buying in this area that will cause a gap up, that will actually break above these moving averages. But we didn't see that. So the buyers could not do that. The money they provided here could not do that. Then the sellers won, and then the market started to go down. That means in this area we wouldn't have entered the market. Okay, now come to think of how I trade. I am not a fan of in and out. I don't jump in and out of the market all the time. It is not my own thing. I don't like it. So what I normally do is, for example, now that we are coming down on this weekly, I am expecting it's coming towards this area of 20 weekly moving average, which will coincide with this 50 RSI. Okay, so when we come there and I go to my hourly, and then it gives me the pattern of my buying, that yes, the buyers have stepped in and they are winning the game, and then caused a gap, and I enter. Once I enter, I stay there. I will go down. I will now allow it to flow with the weekly trend. I like to flow with the weekly trend. The weekly trend means I will stay above this 10 MA of the weekly, and then a break of it. For example, if I had entered here, for example, and then we are going up, I'm going to stick until this 10 MA is broken, then I am out. But that does not mean I'm going to wait until the final stage to start going out. I'll go down to my daily to watch how the levels are going. Once I go to level 1 on the daily, level 2, level 3, I really start to take out like 70% of my money from the market. And then whatsoever thing that is there, let it keep riding until a break of this weekly MA. That is when I will now maybe decide to come out another 20% and leave the 10% for the market to reset for me to enter again. Let's go to something like I saw something like the DOG this morning, gapped up. Okay, the DOG, Datadog. So if I want to select on the individual stocks now, I'll go on my daily. This is on the individual stocks. Okay, remember you have to check whether you are on the uptrend. So, but on general market we're on the uptrend. Okay, so let's come to this place. If I want to trade this Datadog, because I can see that they reported very good earning and everything, and then we gapped up, that means there is an imbalance here. What I'll do is, I can tell you, let's analyze this place. But this is not the general market, okay? So let's analyze this place. So the market stepped down into this moving average. The buyer stepped in, not strong volume, because they were actually waiting for maybe news from the company. They are earning news. And then the buyer stepped in finally and then caused this gap. If I'm to buy, I'm not going to jump in now. I will wait, but this is my buy point. I will wait for this to like come down, touch this area of, let me draw this one, touch this area of imbalance, this gap, and then form something that is strong with volume, engulfing pattern or a reversal pattern within this box, this area. Then I will now buy into it to ride it up. Or when this moving average, this 20 moving average maybe comes up here, and this is holding sideways, and then touching this my 20 MA, and then have a bullish engulfing, I will now enter the market. So this is how I will play it. I will also say, if you're really not good at selecting the stocks, focus on the general market. You can just be doing the leverage like UPRO, which is triple leveraged SPY, or TQQ, which is triple leveraged QQQ. Okay, because this is the general market, which is the ETF, the index. You want to be in the market, because individual stocks, any news can come up and it can make it to go down or go up, which will affect your mood so much. If you are trading individual stocks, you have to really have the backbone to do individual stocks. Hopefully you now understand how to know that accumulation, that the buyers are really accumulating, and how they overpower the sellers for you to have the confidence to be able to enter. And I hope you understand the importance of gap. Gap will let you understand that there is too much money that entered that caused an imbalance, a shift in the market. If it has been going down, you can see that shift, that yes, the money that entered have really pushed the market to the other direction, and then you want to find an entry in that area. Always remember, if you are trading individual stocks, you can always put your stop loss. Personally, I don't use stop loss, so don't trade like me. I know what I'm looking out for in the market, and I know how to manage my portfolio. But if you are a newbie and you are starting, please use your stop loss. Whenever I'm trading the bigger market, I don't use stop loss. Okay, so let's go to this SPX again. When the market was actually on this area, I was actually thinking that we have extended, we should be expecting our pullback. If you have been following me, you should have known that I've been talking about this pullback. So if I try, let's say this market gets to this purple line, purple MA, which is our 20 MA on the weekly, and coincide with this 50, what will I do? I will start looking for this pattern which I just analyzed for you on the hourly. This kind of pattern that will now, let's see here, let me use here. You see the market dropped, the buyers entered, the sellers did their last fight, the buyers entered again, making sure that this particular place they entered the first time have not been broken or could not be broken. They really hold their ground. And when they really entered again, remember, I am always watching out this volume. There is something I want to tell you. Whenever you see double volume above this average 1, 2, it is a strong accumulation. If you see, like for example here, it's a strong down but countered by this one, up volume, which actually put the market up. Here also a strong down countered by the buyers again. Here again, and that strong down countered by the buyers again. But you can see the buyers entered here 2 and 2 when they now want to enter before they cause this gap. But look at this place. You can see when we are coming down here, you can see the reverse becomes the case. It's now 2 here, 2 sellers, you see 3, 1, 2, 3, and then entered here but could not even follow up with the second volume, just only 1. So there is no way you would have got trapped here. If you really understand how to read the market, there is no way you would have got trapped. I think I have gone so far. This is almost 30 minutes, so I will call it a day. Thank you, and I wish you success in your trading career.